Okay, good afternoon, good evening, and even to people from California joining us, good morning. I'm Jason Weiss, COO and Dealflow Manager here at Axis Innovation. Pleased to have you all joining us for the retail session. For those of you who have been with us all day, we've had an incredible day. We started early this morning with mobility, followed by a keynote presentation by Ola Kalenios, the CEO of Daimler Mercedes-Benz, a session on TMT media, followed by fintech and cybersecurity, several other great keynote speakers, and now the retail session, which I'm super excited to get into. We've done quite a bit of work in retail. We have a fantastic panel of investors from Israel, the UAE, from Europe, from North America joining us, and 3 Israeli startups that we've picked we think are really on the cutting edge of retail that are going to be presenting here. So I would like to introduce our panelists. First, I will just call you up one by one, and if you can say a minute about yourself, your background, and about your fund. So first, Basil, can you open your mic and introduce yourself?
Jason, nice to reconnect with you. And my name is Basil Moftah, and I'm based in Dubai. I work at Global Ventures, which is a VC firm here in Dubai looking at the Middle East and North Africa region. I'll start off by saying how excited I am. I think this is my first Israeli conference to attend after the Abraham Accords, and very, very happy to be here and to be part of everything going on in the tech scene in Israel. We are a VC fund that looks a lot at Series A. We work with companies both in B2B and B2C. We like to be this first kind of institutional check, structuring, round, getting boards and governance put in place, helping companies accelerate into new markets, and so on. So that's what we focus on. We've looked at everything from e-commerce, we look at digital health, we look at ed tech, we look at cybersecurity as well. And so, very happy to be here, and hopefully I covered all your questions, Jason.
That's good enough to start with. Thank you, Basil. I'm really pleased to have you here. Next, Inbar.
Sorry, let me unmute. Hi, Jason. It's great to be here. I'm very excited to join you on this event. I'm a managing partner at Incapital Ventures. We invest in early growth stage B2B companies, predominantly from Israel. We focus on companies with product market fit and traction in the North American market. And we're considered as active investors. We support our portfolio companies as they grow with help on strategic partnerships, building the teams, building management, and helping the company scale. We can lead or we can join rounds. We have that flexibility, and we're pretty agnostic within B2B. We made some investments in IoT, in machine learning and AI, marketing technology. So we're very focused on the stage and on the traction and the team, obviously.
Thank you, Inbar. Next, I'll pass it over to Matan in Toronto.
Hi, everyone. I'm the Vice President of Verstra Ventures. The most important thing about us is that we're part of a large publicly traded company in Canada called Constellation Software. Constellation is, by most metrics like revenues, Canada's largest tech company. They go around the world buying up software businesses and have amassed a portfolio of close to 1,000 businesses over the last 30 years. Verstra was started about 3 years ago as a way to dip our toes into investing rather than buying businesses. But we operate like a pure venture capital firm. We're looking to make minority investments and look for third-party exits. But with that, we have all the resources of this massive corporation. So that comes with access to customers, access to resources that the typical VC may not have, which makes us somewhat unique in the Canadian VC landscape. We look for early stage B2B software companies that are focused on a particular vertical. We invest anywhere from C to Series B, and we can do follow-on rounds, we can lead, we can follow. One thing that makes us pretty interesting is that we're opportunistic. As long as the deal looks good and we can learn something from it, we'd be very interested to learn more.
All right, thanks, Matan. Next, Jason from Left Lane in New York.
Awesome. Thank you, Jason. Good to be here coming from New York. Jason, one of the partners here at Left Lane. We're a new fund, started last year, 630 million. We all four partners came from Insight Partners. So we grew up in the enterprise software world, but started investing in consumer. And so Left Lane is kind of an extension of spinning out of that to formalize the consumer and internet investing practice. We lead consumer deals from $5 to $50 million checks. Historically, we've invested in companies like The Farmer's Dog, Light Tricks, over in your guys' neck of the woods, Delivery Hero, a bunch of consumer marketplaces, subscriptions and whatnot. I'm excited to be here.
Awesome, thanks, Jason. So next, also in New York, Joseph from Interlace.
Hey guys, thanks Jason. Thanks for having me here. So I'm Joseph, based in Brooklyn. I started, I'm a managing partner at Interlace Ventures. We're based between San Francisco and Brooklyn. We invest solely in technology for the commerce world. That's what we've been doing for the past 5 years. Both my partner and I are ex-operators in this space globally between Asia, the US and Europe. We invest very early stage, from angel round to seeds, check sizes between 50 to 600K. Where we don't lead rounds typically. What we do though is we try to bring our network of 100 plus brands and retailers for our B2B companies to help them develop business. And the goal is to bring them, an additional 5 to 6 customers in their pipeline.
Next, thank you, Joseph. Next, Adam. I don't know if you're in New York or Israel, but wherever you are, take it away. And again, for Ibex for being one of our sponsors. Thank you.
Thank you, Jason. And sometimes I don't even know where I am at. I do live on an airplane. Right now, I'm actually based in New York. Ibex is about $1 billion firm. We manage, I guess, 2 verticals. One is Israel from a geography perspective. The other one is mobility. From an Israel side, we have about $750 million invested in Israel across from, let's call it the earlier stage, kind of $1 to $2 million ticket of that kind of post seed up until kind of the Series B, C, where we're writing, 15, 20, $25 million checks. We have offices in New York, Tel Aviv, and Denver, Colorado. We are pretty agnostic to sectors, to industries. We try to find, similar to what Basil said, kind of good management teams, opportunistic, B2B, B2C, technology, and really, it's an opportunity where companies, they make sense. They originate, let's say from an Israel perspective, they originate out of Israel, and then we look to expand them and build them beyond globally.
Great, thanks, Adam. So that's our introduction, and hopefully you guys are excited as I am. And now I'm going to go through a couple questions. So this is all about retail, and retail has gone through an incredible shock over the past year, with physical stores largely taking a tremendous hit, and e-commerce has skyrocketed. If anybody was watching our earlier session with Michael Wolf, we really touched on some really interesting stats here. Online grocery, for example, has doubled in most markets, and people are doing more online shopping, and some people even started if they weren't doing it before. So I'd like to ask all of you for your opinion, if you think this kind of growth is going to continue, or do you think people are really eager to go back to stores and we're going to see physical commerce pick up against them? So we can just go around. Basil, I'd love to get your take on this from your geographies as well in the greater Middle East.
Yeah, no, the common thing that everybody's saying is that we've accelerated the e-commerce revolution by, 3 years, 4 years. I guess the way we've been seeing and monitoring here is that it's probably more like 5, 6 years, because the starting point in the region was lower, if you like. So the jump was much higher in terms of people moving into it. Omni-channel is becoming more prevalent, and there's a lot of discussions with a lot of the e-commerces about using different methods for people to buy online but pick up in store, or go to the store but actually complete an online transaction and get it delivered home. So lots of experimentation in the different areas is what we're seeing. I think it's a permanent change on my side, and I don't think there are lots of sectors like food and so on that I don't think will be going back to anything like pre-COVID.
Thank you very much. I'd like to ask Joseph, how about you in New York? And this is really your space, is retail and e-commerce. I'd love to get your thoughts on this question. Do you think we're going to just keep seeing this high growth, or we're going to see a return to physical?
So for sure, e-commerce is going to be a large part of e-commerce, and we're seeing it. You know, I spent 5 years in China, and just the growth of e-commerce in China is just massive. The share of retail sales just being online is massive. And I think when we think about how the West is trending, it's trending towards that 40% share of retail sales online. I think consumers are going to go back in stores, but for different purposes. It's not going to be a shopping destination. It's going to be an experience destination where they can go on and try products and experience brands in new environments. I'm actually quite excited on how physical is going to look like, you know, starting the end of the year, and we're going to see models like Beta explodes, like Showfields explodes, where consumers just go to experience products rather than go and shop. I think the most interesting example pre-pandemic was toys. You know, Toys R Us was seeing a massive amount of traffic in store, but very little purchase, because parents were going to try out products and experience products with their children to see which one they really liked, and then they were going online on Amazon to purchase. And I think we're going to see more of that going, and so it's going to be on retailers and on brands to sort of adjust their business model to take some share of that revenue, some share of that attention through revenue, and monetize that traffic.
Thank you, Joseph. Any other panelists like to share their insights into this question?
Yeah, but I would just add that I agree with what Joseph's saying. I think it's about that experience. You know, you for example, you know, there's a local bookstore near my office in New York. You pretty much, if you watched that bookstore, you would see people coming out every day with a book in their hand, versus going on Amazon. You know, I think there's millions of books. There's everything you want. That bookstore does not have every book, but it's that experience. You go in there, you come out, you know, and they probably know more trends about that consumer than Amazon knows, because Amazon might say, if Joseph referred to me a book, you know, and maybe I looked at it, maybe I didn't buy it, maybe I bought it, I didn't like it. They're gonna forever show me that book and things that I might like that. Whereas in that bookstore, they pretty much know me, so it's a different experience. So I think it's a combination of all. I do think though that it's also about the financial kind of the checkout experience, as opposed to just the shopping, and I think that changes.
Thank you, Adam. All right, well, my next question is moving on to D2C, direct to consumer. And this is also an area that's boomed. If anybody's followed Shopify, they've doubled in the past year. Numbers I saw that they're almost 40% of Amazon's third-party GMV, and really, really growing amazingly. We're seeing more and more of these D2C brands. So I'd love to pose this question out to our panel. What are your thoughts of these D2C brands? And Jason, I'm going to call on you first, because I know that's a lot of your experience as well. What do you think of these direct-to-consumer brands versus traditional retail brands? How are we going to see this evolving in the next 2, 3, 5 years?
Yeah, so D2C brands are here to stay. The power of these companies is that they own the customer, right? So I mentioned Farmer's Dog before, but have invested in Allbirds, Figs. I mean, take the Farmer's Dog example. These are customers that are not stepping foot in a Petco or a PetSmart or whatever your local, you know, big box pet retailer is. And that's hugely, that presents an existential threat to these incumbents. And these incumbents that are not good at spinning these direct-to-consumer brands up themselves. So, and then, you know, when you just think about the structural advantages of a direct-to-consumer company economically, I mean, you know, as a dog food brand, you could be spending 20 to 30% on slotting fees, promotional fees, just so that you get into the right part of the store. And now all of a sudden that just drops immediately to the bottom line. You know, companies that have good unit economics that acquire direct to consumer can just spend so much money to acquire customers. I think that when you own the customer, when you control them, when you're preventing them from kind of going into the existing retail or other experience, I think that's what's most important. And so also, because these direct-to-consumer brands are often offering a better product at the same or lower price, just given their structural advantage. So we are quite long D2C. I think we have a very, very specific type of direct-to-consumer business that we look for. Not all are created equal. And so can talk more about that. But yeah, we're quite long D2C, have been for a while, and think we're just, we're just getting into the second inning of it.
Thank you, Jason. So how about Matan? I'd love to hear your thoughts on the D2C versus traditional. Obviously, you're doing B2B, but what are your thoughts on this evolution we're seeing?
Yeah, so one of the things I've seen is, while you have the direct-to-consumer brands selling, creating their own e-commerce website and brand, what you also have is, the Wayfairs of the world creating a marketplace for, specialty marketplaces, for example, furniture. So you have traditional manufacturers now selling through these marketplaces and getting a significant lift from that. Obviously, Amazon was one of the first to do that successfully. So we see a kind of two things happening. One is these direct-to-consumer brands creating their own kind of websites. And then you have kind of the model where you share the revenues with the Wayfair type marketplace. So we see kind of both those things happening. And maybe on the B2B side, we're seeing a proliferation of software companies that are helping, your mom and pop e-commerce site with their own brand, like a Casper or something else, and giving them the tools before they're big enough to compete with a Wayfair. So that's kind of a lot of what we're seeing is, how do software tools that sell to businesses to help them compete with the Amazons and the Wayfairs if they want to take their direct-to-consumer brand and compete with those massive marketplaces.
Thank you, Matan. So Inbar, I'd love to get your thoughts on this because you're doing B2B, very US focused. How are you seeing this retail space?
So first of all, as a consumer, I can tell you that I personally love D2C, and the fact that you can interact directly with the brand has a lot of advantages to the brands themselves. As Jason said, they own the consumer. They do amazing things with that. They create communities and they create discussions, and there is so much to learn about the consumer directly. That I think they have a huge advantage. So I think this trend is here to stay and will continue to grow. And I also think that just in terms of the Z generation, for example, I think the Z generation products that are directed to the Z generation are gonna grow more than others when it comes to D2C, because they prefer D2C, and these guys don't really spend any time in retail. So I think definitely we'll see more brands turning that way.
Thank you, Inbar. So I have one more question I'd like to just go around to everyone, which is not retail specific, but it's really about how our communication has changed with Zoom, remote work, video conferencing. And I'd love to get all of your opinions if you think this is going to stay, if we're going to be still, hopefully we're entering the post-COVID era, but whenever that is, how much business is going to be done through Zoom? How much are you going to maybe continue doing Zoom calls with potential startups and others? What's your take on this going forward? And why don't we just kind of go around from the beginning? Basil, I'd love to start with you, and I'd love to hear your thoughts on this remote work and the new era that we are in with video conferencing.
So I miss the office. We're back in office as of a week ago with the team. We're taking meetings again. We've UAE, I guess after Israel, is one of the highest vaccination rates, and people are getting more comfortable. And we feel like a lot's been missed out by not having those, meetings. So I guess the short answer to your question is I definitely see Zoom staying and being popular, but I think it's about to become, less popular than it's been for the last 9 months. I think it's really exceptional. And we are excited to spend time with entrepreneurs, because I think a lot is lost through Zoom. A lot of the, sensing the entrepreneur, what makes them nervous, what makes them happy, and so on. So I guess we're excited to get back to work. And I think, I'm more than happy to shut my computer and stop using Zoom if I can.
Sure. Inbar.
I think we're all experiencing a bit of Zoom fatigue at this point. And I think eventually it's a very effective way to communicate. So I think eventually once as we're slowly getting out of the pandemic, we're going to see a combination of in-person, going to the office, but also continuing to use Zoom and other platforms, because I think, especially when it comes to traveling, so much of the traveling that we used to do was unnecessary. And I think we're all realizing today that we can achieve the same results, maybe not the same, but almost the same results with Zoom. So I think eventually it's going to be a combination of traveling and working from the office, working from home, definitely less traveling. And I actually think it's a positive thing, and it's a positive it's a positive thing in terms of being effective and being able to deliver faster results.
Thank you. Matan.
Yeah, I agree with the prior comments mostly. Definitely there's Zoom fatigue, but I also think we've realized that, like Inbar said, there's just a lot we can continue doing virtual that just doesn't require people being together physically. Like, for example, we're going to go back to the office eventually, but I'm probably going to go half as much as I used to, because it just is so unnecessary, right? You don't need to be physically with people all the time, but also you need to be physically with people sometimes. So I think the hybrid model is definitely going to be the way things are going to happen going forward, for events, for meetings, for going to the office. So I think that's a welcome change, at least from my point of view.
Thanks, Matan. Jason.
So we closed our fund the Monday after COVID started in the US. So we've known nothing else. So we've done 13 deals, 300 million deployed. We say you can learn everything about a company except for maybe the founder's height, and that's because we found out that our first investment after investing that the founder was 6'7". We had no idea, but I think there's a ton of efficiency we've gained, even just travel time. You can do probably 3 times as many meetings in a day, so we're seeing a lot of efficiency gains. And I do think, just from a personal standpoint, it'll be really beneficial to get meeting people, and also just for our team who hasn't really worked together in person yet. But I don't know how much we're truly losing, and I think it's actually forcing us to be more efficient. And I think we will probably go back to 20 to 50% of the meetings that we used to have.
Interesting, thanks. Joe.
Yeah, so I might be the odd one here. I only use Google Meets and not Zooms, but I agree with Jason. I think we'll go back to maybe 20% of the meetings. I don't know how it's going to work to have everybody in the office actually taking Zoom or Google Meets calls at the same time. So it's going to be a logistics question in the office, but I think this human interaction, just like, to link it to brands and products, having that experience, having that human connection just creates a stronger, connection between people. And so I would imagine that, some of the meetings we do in person are going to be for that, just to discover, be more empathetic with the deals that we'd be making. And I think it's interesting what's happening in Miami right now with a lot of VCs going there. Is there are a lot of deals happening because between VCs and entrepreneurs that are down in Miami, because they're seeing each other in person, and I think that creates a bit of a stronger connection. So I think eventually we'll go back to meeting quite a lot in person because we enjoy that social interaction as humans. But it's definitely more efficient to do it through Google Meet.
Great. And Adam, what are your thoughts? I mean, you're always traveling, so you haven't stopped, it seems.
So I have not stopped. I've actually made it to Dubai a couple of times. I've made it to Israel a couple of times, and I've traveled around. I mean, I've been extraordinarily safe, and I probably should have invested in COVID testing because I've taken before, during, and after more times than I want to admit. I also think from a family perspective, it's probably good to be out of the house more than in the house. But in all sincerity, I think meeting with people face to face doesn't replace. I think there is an efficiency to taking meetings and having calls, and more power to Jason for deploying that much capital in a short period of time with Zoom calls. We have a pretty nice strong team in Israel where we invest quite a bit of capital, and we've invested in 11 deals since the pandemic started. They have not been via Zoom. There have been follow-ups, and I think there's an efficiency to it. But there's a lot meeting with people, seeing the technology, looking the founder face to face. So I think it's probably an enhancement. But for those who want to get out there, I think our office has been open. On a kind of when people want to come in, they come in. So we've been pretty COVID safe. But the office has been open, and we continue. We think it will continue just to strengthen. As opposed to, it won't be replaced back to where it was. I think it's just an enhancement, and now we'll be able to do whatever is most efficient for anyone.
Awesome. Thank you, guys. So that wraps up our first part, the roundtable. Now we're going to go on to the startup pitches. So I hope you guys are all ready. And the first company is Oriient. So Mickey, I hope you're back in, right? You can open up your camera and mic and screen share.
I hope you can hear me and see me.
We don't see you or your presentation. Can you hear you?
Wait, just a second.
Comment. Great.
How about now?
Perfect. So whenever you're ready to go away, and then panelists will have a few minutes for Q&A after each pitch.
Okay, thank you. Okay, so I'm Mickey, CEO and co-founder of Oriient. We're pretty much dependent on GPS in our everyday life, down to the point where we can't really imagine a world without GPS, but it does happen, and GPS does fail sometime. So this is a world without Google Maps, without Waze, where FedEx can't run their business, where Uber, for example, can't operate. Pretty much a nightmare, and luckily it doesn't happen too often. But every time we go into a building, we actually enter such a world where GPS simply stops at the door, and there is no platform for location services. And this has been a problem for quite some time, and people have tried to solve it using different types of technologies, from Bluetooth beacons to Wi-Fi to even replacing the lights with smart lights. But none of these technologies were able to deliver what GPS had from day one, is scalability and accuracy. So after 10 years of trying, we're still stuck. Sorry. Microsoft PowerPoint failed. Just a second. Sorry. So just a second.
We'll wait for
that. Yeah. I can tell you that it is coming up, and time is moving very slowly as it comes up. So sorry for this glitch.
You left us with a cliffhanger in the middle of the GPS.
Yeah. So hopefully I won't have to completely improvise, but let's see. Yeah. Oh, I think it's coming up again. Just a second. Can you still see my screen?
We can see. If you want to, maybe you can stop sharing and then reshare.
Yeah. Okay. Yeah. Okay, it's almost back up. Let's go back to that cliffhanger. And yeah, let me reshare. And I really do apologize for this.
I'll tell you when it's up.
Yeah.
Almost there.
Should be up now, right?
Yes. Let's
okay,
going.
Great.
Right.
So yeah, coming up to the cliffhanger, after 10 years of trying out different technologies, people are still using paper maps to find their way around buildings. But I think there's a better way of offering indoor navigation that simply works and offers 3 feet of accuracy, pretty much in any building, anywhere in the world. And until now, it's a story you've probably heard before. But the new thing is that we do it without any infrastructure. So there is no Wi-Fi involved, no beacons involved, no hardware whatsoever. What we use is actually something that is all around us all the time. It's in your home right now, wherever you're connected, which is Earth's magnetic field. It's always been there, and it behaves in unique ways inside buildings. What's new is sitting in your pocket, and that's your phone equipped with a compass. So if you ever wondered why your phone needs a compass, it's actually for running Orient's technology. We take the behavior of Earth's magnetic field inside buildings and the sensors that are, in every smartphone today, and combine them to allow your phone to understand where it is inside any building with 3 feet accuracy using just software. So this is pretty revolutionary, and for the first time offers the combination of scalability and accuracy that this market really needed. Applied to retail, this allows a true omni-channel experience where you can research something like a camera online, and then when you go to the store, go directly to that camera to experience it and complete the purchase while you're in the store. It allows retailers to understand how people interact with physical spaces and gain a deep understanding on the path to purchase, and then use that data to contextualize how they communicate with the shopper right by the shelf, right at the moment of decision. Another example for how it's being used, this is actually a real use case that we're doing with an American grocery delivery service, one of the larger ones, where they used our system to help the shoppers navigate and find items in the store more quickly and to make sure they find everything. So this allows them to streamline their operation, deliver faster to the home, and also save a ton of money on operating costs. And up until now, I've talked only about retail, but this also applies outside of retail. And we're working with one of the larger American carriers on using our location services for public safety management and location awareness. We are a team of 16 people. Some of us are literally rocket scientists, and those are the brains behind this amazing technology. We started a company in 2016. We started our go-to-market late 2019. And so far, we're doing very well with those first 2 contracts that I mentioned that we just signed. We're already at $3 million ARR based on this patented technology that's 20 times more accurate than competing technologies and 1,000 times more scalable, because we're bringing software into a field that was previously dominated by hardware. We're now raising our A round to accelerate our go-to-market and open up new markets and new verticals. And we'll be happy to discuss our funding plans with you. So that's Orient, a hassle-free way to do indoor positioning. My email is very simple. It's m@orient.me, and I'll be happy to hear from you. Thank you.
Thank you. So let's go into 2-3 minutes of questions. I'll open the floor. Anyone who would like to start?
Sure. Let me ask a question here. Does the software using the way you figure out where someone is on the map? Do you have to overlay that against like an existing floor plan, or can you actually figure out where there's concrete walls, where there's openings, where there's shelves? Can you do that yourself, or do you need to overlay that against an existing floor?
we usually overlay it on an existing floor plan, but we can also do it what we call blind mapping and actually understand how the space is built from the magnetic mapping process that we do.
And it would understand the difference between concrete and, let's say, wood or different types of materials?
No, we only understand the layout. So basically where people can walk and can't walk, and we can't really discern materials.
Any other questions?
Can you maybe talk about the business model a little bit?
Yeah, we call it indoor positioning as a service. We basically charge a fee per square meter per year. So it basically translates into a, when we work with retailers, it basically translates into a fee per store per year.
Can you
and the competitive landscape?
Oh, sorry.
Sorry about that. And the competitive landscape?
So with this type of technology offering scalability and accuracy, there are very few players. The field only became possible in 2016 when accurate enough sensors made their way into smartphones. So today there are only 3 players with similar technology in the world. And this type of technology offers advantages that other technologies can't offer. So it offers, like I said, the combination of scalability and accuracy, where hardware beacons only offer accuracy but not scalability, and Wi-Fi offers scalability but not accuracy.
We have time for one more question. Anyone would like to ask?
Yeah, can you please describe more the integration process and the partnerships that you have? You mentioned 2 partnerships.
Yeah, so in terms of integration, we're simply a software plugin, an SDK that goes into mobile apps. It's as simple as using the GPS service on your phone, only applied indoors. And yeah, basically our customers take our SDK, integrate it into their apps, and then we activate the buildings for them. And then any phone with that app in a building that we have activated can have access to its location with 3 feet accuracy.
Easy.
Yeah. Like if you think about it, it's like taking what's readily available outdoors, GPS, and applying it indoors.
Mickey, super interesting. Do you have any sort of idea on usage from a consumer perspective of the indoor GPS on some of your partnerships?
Yeah, so it's quite sticky. So like I said, with that delivery service that, rolled out, that's one of the bigger rollouts that we have. Of the 111 people that used it in the first store where it was rolled out, 100 became repeat users and actually used it 6 more times in a couple of days. And we actually see this kind of stickiness because of the convenience and the time saving it offers. So people automatically go to their smartphone whenever they need a map, whenever they need access to location, and we just extend that indoors. So we're seeing usage patterns very similar to how people use Google Maps and Waze, and it becomes habitual.
Thank you, Mickey. So we need to wrap it up, move on to the next presenter. We'll have time, obviously, for a one-on-one with the panelists afterwards. Next, I'd like to call out from Dialogue. Open your mic and camera, and you can start your pitch whenever you're ready.
All right, let me share my screen.
It's coming up. Just we don't see the presentation yet. Okay, fantastic. Take it away, Omri.
All right, just a moment. Sorry, guys. All right, can you see my screen?
Perfect.
Perfect. All right, so first of all, very happy to be here today, very excited. All right, let's get to it. A bit about us, about Dialogue. Founded in late 2018. After accepting an earnout deal from a previous internet company I founded, realizing the importance in online experience and seeing the great potential in e-commerce customer experience, I founded Dialogue. With me on this journey, Olavi, our VP R&D, A200 veteran, bachelor in computer science from IDC, and Roni Gur, who's an MA in psychology. We're also backed by strategic investors from companies such as Dynamic Yield and Yotpo. Dialogue is on a mission to create better e-commerce experience using technology that actually works for the merchant and not the other way around. We're all aware of the downside caused by poor, flat and generic customer experiences for the merchant, both in revenues and their ability to grow their business. And this is why we've created a very unique, fully automated solution that basically automates the entire process for the merchant. From understanding the user intent in real time, to personalize the experience, to generate content on the fly, automatically. We've created a low-touch platform that actually does the job for the merchant. With a few clicks, every merchant will be able to create rich and personalized experiences that drive results. We at Dialogue imagine e-commerce experience in a way that websites will be personalized in such a way that users will get not just personalized product recommendations, but personalized messaging. Touching the user at all touch points throughout this journey, from personalizing their view on the web to a price optimization to creating better engagement in every step of their online journey. In the past 2 years, we've been working intensively with the market, working with brands and retailers from different verticals, showing them increase in conversion rate, time spent on site, average order value up to 30%. And as our customers grew, we grew with them. We've tripled in 2020, reaching $200,000 in ARR with an ACV of $10,000. We work with leading brands such as L'Occitane, Kiko Milano, and many more. And we are now ready to go into accelerated growth. We have a business in our pipeline that should double our revenue in the next 2 quarters. And we intend to launch Shopify and the other marketplaces towards Q4 this year. We see our go-to-market as a product-led growth, easy integration for merchants through the marketplaces, through the app stores, first Shopify, then the others, one-click integration, very fast onboarding, and we'll be able to drive results and show them, reflect them to the merchant within a matter of days. We're now raising our next funding round to support this upcoming growth, build our Shopify platform channel, build our agencies channels, which we already started, signing with Universal Matan and many other agencies. And that's it. Would love to accept questions.
Thank you, Omri. Let's open it to the panelists for any questions.
Hey, thanks, Omri. Question: where's the source of data coming from? Like, what type of data points do you gather in order to make these decisions?
So we use primarily first-party data. That means, just a second. All right. So we use primarily first-party data. Every action that the user takes throughout their online journey, every product that they view, every product that they add to the cart. We also look at the products, and we use machine learning and natural language processing to try and understand what kind of features say something about the user. So for instance, if user go through low-priced products, we know that they are not likely to buy high-priced products. And we use all the data available Since Dialog is focusing mostly on SMBs, we understand that the data is limited. We understand that it's a lot of the time it's missing. So we've developed a very unique solution to harness any kind of data point inside the website, from the user actions, users' behavior, through the product features and everything described in the products.
I saw that you put the ACV currently at about $10,000. Do you expect it to decrease as you expand to Shopify and other marketplaces?
Yeah, that's a great question. So we kind of divide in the market. Let me just go into one of the appendices. All right, so we kind of split the market into three, let's call it segments. All of those segments, we consider them as SMBs. So we have about 2 to 3 million stores on the lower part of SMBs, which we call them long tail. We expect to have a $2,000 ACV there. This will go. This will be on the next part. So we're not launching our product to this market in the near future. But yes, that will be more focused in the marketplaces, Shopify, and then Magento, WooCommerce, WordPress, and all the others. There's the middle-sized SMBs, the kind of customers we work with now. Any type of merchants that generate between $1 million to $10 million a year, we can expect an ACV of at least $10,000. And then there's the mid-market, which we already started communicating with a few bigger type of SMBs that generate more than $10 million a year, and we can expect up to $50,000 in ACV from that segment.
Omri, thank you for the presentation. Can you please speak more about the pain you solve for your customers?
Sure. I'm going to connect it with the opportunity in the market because they're connected. So basically, if you look back at e-commerce, 90% of the revenues was generated by enterprise level customers. You guys talked about this in the panel, and we see it through Shopify is booming right now. SMBs is now the fastest growing segment in e-commerce. More and more small and medium-sized businesses go into the market. They understand the importance in forming their e-commerce store, but they don't really have a solution that fit their needs. There's a lot of other solutions in the market from companies like Dynamic Yield, Optimize, Limonite, Nosto, and many others. A very robust solution that basically require heavy lifting, 3 months onboarding. You need someone in-house with the expertise to know what they're doing in order to gain good results. You need to pay them. And the license cost is very, very high. And these kind of legacy solutions just don't fit the SMBs. And this is where we come in. We build from the ground up a solution that fits their size and needs in a way that Dialog automates a lot of the processes that merchants had, someone in-house or a team doing up until now. If it's generating content, if it's building the segments, if it's moving the buttons in order to gain good results, we've automated a lot of this process, created a very low touch, we call it low touch, no code platform that with a matter of a few clicks, they will be able to launch a personalization solution into their website and see results within days.
Thank you.
Thank you, Omri. We need to wrap it up now. Thank you for the presentation and the questions. And now I would like to call up Galit from Pairzon to present.
All right, thank you, guys.
So we can stop sharing. Thank you. And Galit, the stage is yours. Just unmute yourself. Yeah.
Okay, just a minute. I'll share my screen. Okay. So hi, everyone. Can you see my screen?
Yeah, can you make it full screen?
Well, I can't find it here. I'm sorry. I can't find the button right now.
maybe a view full screen on the top.
Somehow doesn't work. Sorry. Let's do
What
it this way. Excuse me?
So it's fine with what you have.
Okay. So hi, everyone. I'm very happy to be here. My name is Galit Arizon, and I'm the CEO of Pairzon. I come from a very rich retail background, 20 years in the industry. In the last 5 years, I was a co-founder of a company called Wizmo, in which we sold in the last several months. My co-founder and CTO, Oded, comes from A200, and he has a rich data and security background. Was consulting to Mercedes and working in other cyber company, and we both worked together in Wizmo. And a year ago, we founded Pairzon. And what Pairzon is doing, Pairzon is working on the data play. Pairzon is a leading AI technology for physical retailers, which connects the in-store consumer to its online identity, enabling retailers to increase sales and retention dramatically. So we were chosen to NVIDIA as part of their Inception program for AI for retail. And 3 weeks ago, we were chosen to plug and play brand and retail for the last batch, partnering with them. So what's the problem that we're solving? We know that everybody talks about the growth in e-commerce, even pre-COVID, still 83% of the worldwide, after COVID, 83% of the worldwide purchases is happening in the physical store. And most of this data is disconnected and left on the store. And there's a lot of anonymous customers and actually data that is left. And it's very challenging for retailers to be in touch with the customers once they leave your store or work with the omni-channel of the digital channels of the retailer. So what are the challenges we're solving? We are bridging the digital and physical experience of the consumer, identifying the physical identity of the consumer, connecting the physical consumer identity to its online in order to enrich the data and increase personalization and recommendation. And at the end of the day, provide the retailer with the ability to have advertising efficiency on all the multi-channel interaction with the customer. And we are locating ourselves as an AI platform for marketing, solving the missing part of prediction and decision for retailer in order to provide the retailers with the ability to interact with the relevant audience in real time and increase the ROI. So what are we providing? We're a SaaS AI-based solution for marketeers. We enrich the business data in order to provide them with the ability to increase customer insights and personalization offer, and at the end of the day, to have transparency on the multi-channel that they're interacting with their customers. And how do we do it? Once we work with the retailer, we're actually connecting to one of the data sources of the business. It can be the transactional data or the CRM, a website, of course. We unify the customer's data, generate predictions, and provide the relevant audience for the retailer to use it in the social media or the marketing automation. And at the end of the day, provide the ability to measure the ROI. So we've built a neural network that enabled the system to analyze the data and the algorithms in real time in order to generate predictions about many characteristics of the customers. It can be gender and age and brand affinity and all kind of other characteristics, so that the retailers can target their relevant customers in real time and increase sales. And we're operating as a complementary platform to other platforms of the marketeers, and generate the actionable insights, data enrichment, personalization, and offline conversion. We currently have 20 paying customers from all verticals. We operate in the world, sorry, I'm gonna move faster. We operate in the world of fashion, just a minute, fashion, sport, automotive, insurance, etc. And we're seeing amazing results in terms of ROI to the business.
Thank you, Galit. Great. So now let's open it up to some questions. There was a lot of information in there, so I'll leave it to the panelists to unpack it with any questions.
Thanks, Galit. One question: how does the integration work with these retailers, right? Because I'm seeing all the names you have, the customers you have. Knowing a bunch of them, they have many different types of platforms. So how is that integration done?
Okay, so we're connecting to one of the data sources of the business through a light API. It's a light integration. Once we're connected, let's say, for example, to Verifone or NCR or other POS companies, for example. So we are just sitting on the data source, and every transaction is actually transformed to us in real time, connected to an identifier. And at that moment, identifier can be the telephone number or the email or the last digits of the credit card. And actually, this is the starting point when we see the transactional data from the in-store, and of course, connecting it to the other data points of the business, whether it's the CRM or the ERP or the website, etc.
Got it. And then the way you spit out the recommendations, are they custom, or do you build per customer based on their model or how they're built?
So I can share a demo if we have time, but actually we're providing a dashboard that in the dashboard you can see all your campaigns in real time. And we have an API with Facebook and Google and the other platforms that the business uses, so that you can filter the parameters you want to target. And then the tool generates the relevant audience to share it to the relevant platform. Let's say you wanted to target relevant people for customers for babies who bought 2 months ago in the center of New York. So we generate the audience, we share it to your Facebook account as a retailer. And now when they come back to the business, it can be the digital store, the physical, or to other channels that the business work with. We provide in real time how we are closing the loop in terms of how much money did the retailer spend and how many transactions and revenues generated in the physical store or in all the other platforms that he has. I can show you the demo if we have 1 minute. Let's
save it for the one-on-one afterwards. Let's see if there's any other questions from the panelists first.
Sure, Galit. A lot of people offering retail analytics in various different forms using machine learning and other methods. What would you say is the your company's unique value bring to this space?
Okay, so we're bringing a layer of AI that actually analyzes the data, the holistic data of the business in real time, and provide the business with the ability to increase sales. Now, you have all kinds of AI and prediction technologies, but at the end of the day, our ability to provide a very quick and easy, fast-moving technology that doesn't require, like CDP's very integration that takes a lot of time. So this is why we're able to provide in no time amazing results. And actually, as I said, connecting the dots between the physical, because this is almost 80% of the total purchases, the digital, and actually the social media, that we're closing the loop and turning the physical store to a digital one.
Thank you for the panelists for the questions. Thank you, Galit. So this wraps up our retail session. It's been a great hour. We covered so many topics and covering indoor navigation, online, offline, e-commerce. Really exciting. Thank you to the 3 startups, to Galit, to Omri, to Miki for presenting, to our panelists, for joining us, and of course a big thank you to our sponsors. And we have Ibex, DLA Piper, State of Mind Ventures, Fox Rothschild, and many others. So for now, for the panelists and the startups, click on my schedule for the link for the one-on-one meetings. So the panelists, I had sent you an email about it. For the attendees, we have another great session with the Silicon Valley representative of Dale Carnegie on really how to pitch your way to the top investors. It's a hands-on workshop from one of the best in the industry. So I would encourage everyone to see that in my schedule, and you can join that now. Thank you again to everyone for joining us, and we will see you in the next session.